The Silicon Valley Bank has failed, causing shockwaves throughout the financial world. The Silicon Valley Bank, known for its expertise in lending to tech startups and venture capital firms, has collapsed under the weight of its own debt. The news has sent ripples through the global financial markets, raising concerns about the stability of the banking system and the broader economy. In this video, we'll explore the events leading up to Silicon Valley Bank's collapse, the impact it's having on the financial industry, and what it means for the future of banking. We will also talk about how it is impacting the USDC. Before going further, it's important to know that this video is for informational purposes only and does not constitute financial advice. Don't forget to subscribe and turn on notifications to stay up to date with our latest videos. Now, let's get started. Silicon Valley Bank was once considered one of the most innovative and fastest-growing banks in the United States. Founded in 1983, the bank catered to the technology industry, providing loans and other financial services to startups and established companies. The bank's success led to rapid expansion, and by the early 2010s, its funding base had reached nearly $190 billion at its height. To maintain profitability, Silicon Valley Bank invested heavily in a portfolio of around $120 billion, longer duration U.S. Treasury bonds, and fixed-rate mortgage security. The bank's investment strategy relied on the assumption that interest rates would remain low or gradually rise over time. However, this assumption proved to be incorrect as interest rates began to rise more quickly than expected. As interest rates rose, the value of the bank's investments fell, leading to significant losses. Silicon Valley Bank's financial position was further weakened by its reliance on short-term funding to support its long-term investments. This left the bank vulnerable if interest rates rose quickly, as it would be unable to roll over its short-term debt at favorable rates. Silicon Valley Bank's troubles were compounded by its exposure to the technology industry. As the market began to shift towards larger, more established technology companies, Silicon Valley Bank's core client base of startups and early-stage companies began to shrink. This reduced the bank's ability to generate new business and forced it to rely more heavily on its existing loan portfolio. In an effort to shore up its financial position, Silicon Valley Bank attempted to sell off some of its longer-term investments to raise cash. However, the bank's large holdings made it difficult to find buyers, and it was ultimately forced to liquidate many of its investments at a loss. The collapse of Silicon Valley Bank had significant consequences for the broader financial system, particularly for the USDC stablecoin. Silicon Valley Bank had been a key partner in the USDC ecosystem, providing banking services and custody for the stablecoins reserved. Now things were going to take bad turns, but before we get to that, if you're getting value from this video, make sure to hit that like button and subscribe if you haven't already. And by the way, we have recently launched our Twitter page, so follow us there as we will update all the new happenings on Twitter first. Link is in the description. So when Silicon Valley Bank failed, it caused a crisis of confidence in the USDC, leading to a sharp decline in its value and a rush to redeem coins for US dollars. As interest rates started to rise in early 2023, the value of Silicon Valley Bank's longer duration portfolio began to decline. The bank's customers also started to withdraw their deposits, exacerbating the problem. In response, Silicon Valley Bank had to sell some of its portfolio holdings to meet these withdrawal demands. However, this only served to further depress the value of the remaining portfolio holdings. The situation has become critical. The bank was facing a liquidity crisis, and there were reports of depositors lining up outside of Silicon Valley Bank branches to withdraw their funds. At the same time, Silicon Valley Bank's credit rating was downgraded, making it difficult for the bank to access funding in the capital markets. As the situation worsened, the bank's board of directors decided to put the bank up for sale. However, no buyer emerged. It was clear that the bank was on the brink of collapse. In an effort to limit the damage, the Federal Reserve stepped in and brokered a deal to sell the bank's deposits to another bank. However, this did not include the bank's portfolio of securities, which were sold separately. The sale of Silicon Valley Bank's securities portfolio proved to be a major setback for the bank. The portfolio, which had a book value of around $120 billion, was sold for only $118.2 billion, resulting in a loss of $1.8 billion. This loss was a significant blow to the bank's capital, which had already been severely depleted by the deposit withdrawals. On March 10, 2023, Silicon Valley Bank officially declared bankruptcy, marking the largest bank failure in U.S. history. The collapse of Silicon Valley Bank had far-reaching consequences, including the loss of jobs, the disruption of financial markets, and the erosion of public confidence in the banking system. It also had a significant impact on the value of USDC, the stablecoin issued by Silicon Valley Bank. The value of USDC plummeted in the wake of the bank's collapse, as investors scrambled to sell their holdings. Actually, USD Coin, the world's second-largest stablecoin, depegged and traded over 12% below the US dollar last Saturday following the collapse of Silicon Valley Bank. Deposit withdrawals and the loss of $3.3 billion by USDC issuer Circle due to its investments in Silicon Valley Bank led to a run on the bank and triggered a sharp drop in the USDC's value. Circle made a statement on Saturday explaining that it had initiated a transfer of its Silicon Valley Bank deposits last Thursday, but had not received these funds by the close of business. As U.S. banks opened on Monday, the U.S. Treasury Secretary Janet Yellen confirmed that all Silicon Valley Bank depositors would be made whole, and Circle announced that all $3.3 billion of its USDC reserve deposit would be made available. However, the incident has highlighted the risks associated with stablecoins and the potential for contagion within the crypto market. The collapse of Silicon Valley Bank had far-reaching consequences, especially in the tech startup community that relied heavily on the bank's services. Silicon Valley Bank was a crucial provider of financial services to many startups in the Silicon Valley and beyond, including funding, deposits, and other services. The news of its collapse led to widespread panic among these startups, which feared that they would lose their deposits and access to credit. The fear of contagion also spread to other smaller and regional banking institutions that had exposure to Silicon Valley Bank. These banks, which had already been hit hard by the 2008 financial crisis, feared that Silicon Valley Bank's collapse would trigger a wave of bank failures and destabilize the entire banking system. To prevent this worst-case scenario from unfolding, regulators intervened to stabilize the situation. The Federal Reserve, the Office of the Comptroller of the Currency, and the Federal Deposit Insurance Corporation worked together to ensure that depositors did not lose their money and to prevent contagion from spreading to other institutions. The FDIC, in particular, played a crucial role in the stabilization effort. It took over the failed bank's deposits and transferred them to a healthy bank. This ensured that depositors would receive their money back and the fear of losing deposits subsided. The ripple effects of the Silicon Valley Bank collapse are likely to be felt for years to come. The immediate impact was felt by the banking sector, with many banks suffering losses in the aftermath of the collapse. Last week saw a widespread sell-off in bank stocks, as investors became nervous about the health of the banking sector as a whole. For the tech startup community, the collapse of Silicon Valley Bank has been a wake-up call. Many startups rely heavily on banks like Silicon Valley Bank for funding and support, and the collapse has raised concerns about the availability of credit and the health of the banking sector more broadly. However, it is also possible that the collapse of Silicon Valley Bank could lead to a renewed focus on innovation and entrepreneurship, as startups seek new sources of funding and support. That's it for today's video. If you're interested in cryptocurrency, stay tuned to our channel for informative content. We cover everything from the rise of digital currencies to the latest trends in the market. Join us on this journey and stay up to date on all things crypto. And don't forget to follow us on Twitter. We see you in the next video.